Pam, can you gather up the troops, and we're going to watch a video from our client Trevor. He really wants us to watch it about charitable giving tax deductions.
All right, let's go. To reap tax benefits for making charitable donations, you must itemize your deductions rather than taking the standard deduction. Donations of both cash and property are deductible. For cash, you need written evidence, either a confirmation from the charity or a bank record, canceled check, or credit card statement. You can also donate financial assets such as stocks and bonds to charity. And remember, only contributions to certain organizations are tax deductible.
Hey Callie, are you busy?
Hold on, TMZ is almost over.
Oh geez. All right, well I'm looking at the information on charitable giving tax deduction. It's actually pretty cool.
Usually, when Pam talks to me, I don't listen. But today was different.
This website says because of the free rider program, government involvement is needed in order to provide enough charitable support for many public goods. The government can be involved in two different ways: subsidizing charitable giving and providing the good itself. Subsidizing charitable giving is used to increase private sector support, and it allows individuals to deduct from their taxable income the amount they give to the charities. The second option is for the government to provide the good itself. The government provision may crowd out private contributions to the public good, which causes the amount of donations to most likely fall. Also, when the government tax subsidizes charitable giving, it may crowd in or increase private contributions. This occurs because the government tax subsidy lowers the relative price of charitable giving. A lower relative price for charitable giving increases private giving through both substitution effects and income effects. So basically, if the government spends the money directly, it raises public resources available to charities, but it can also crowd out potentially lower the private resources.
Well, Pam, it's really interesting. Here's what I found. By offering a tax subsidy, the government hopes to encourage changes in people's behaviors to donate to charities, which will cause a marginal impact on the economy. The government should use a tax break if the increase in charity per dollar of tax break is greater than 1 minus the reduction in charity per dollar of government spending. If this inequality holds, the government can increase the total amount of charitable giving by tax subsidizing private charity rather than directly spending its revenues on charitable goods or services. On the other hand, inframarginal impacts occur when the government provides tax breaks to those whose behavior is not changed by new tax policy. This impact in the revenue lost in rewarding those who are going to give to charity regardless of the subsidy. Efficiency is determined by the share of the tax break that goes to those who are changing their behavior versus the share going to those whose behavior is unaffected. That makes sense.
Yeah.
The most cost-efficient tax breaks have large marginal impacts that come from those who change their behavior.
Corporate Trevor Collier. What's this? A recent study indicates that the tax deductibility encourages charitable giving at all levels of income. According to the IRS, individuals claim nearly $35 billion in charitable deductions on their federal tax returns in 2009. Two issues exist with this current system. Many Americans do not get any tax benefits for their donations because they don't itemize their deductions. And some charities get bigger subsidies than others because they attract more high-income donors who get bigger tax breaks. Male enhancement pill. Pam, get Obama on the phone.
I'm on it.
That's what she said.
President Obama is currently proposing lower tax deductions for the wealthy on donations to nonprofit organizations. Under the Obama proposal, the tax break for charitable donations would fall from 35% to 28%. A recent study estimated that President Obama's proposal could cut charitable giving by $2.9 billion to $5.6 billion a year. This amount equates to eliminating all of the private donations each year to the Red Cross, Goodwill, the YMCA, Habitat for Humanity, the Boys and Girls Clubs, Catholic Charities, and the American Cancer Society combined. This proposal would boost federal revenue by billions of dollars at the expense of negative effects on charitable giving.
In his defense, Obama has argued that it is not fair that the wealthy receive a larger tax break for the same donations to charity when a middle-class taxpayer can only claim a deduction of 15%. One survey of about 1,000 Americans found that nearly 8 out of 10 were against cutting, capping, or limiting the charitable tax deduction because charitable tax deductions encourage people to give their money to help others without getting anything tangible in return.
In terms of the charitable deductions, there's costs and benefits of having the deduction. The cost to the government is clearly, if you're getting the charitable deduction, you're collecting less in tax revenue. The benefit of having the charitable deduction is the benefit that the charities get from these funds, that if you didn't have the deductions, those funds that were given, those gifts, would be lower. And so if individuals think that their targeted charities would probably more efficiently utilize those funds than basically just putting the money into the government pool and have that allocated, then you can argue that, you know, the charitable deduction is on net a benefit because people actually do it.
A wise man once asked me which charitable tax deduction plan I prefer. I told him that I'd prefer not to prefer. First, we think the government should not provide funds directly to organizations and should allow the citizens to decide where the funds should be donated. Second, we think that the government should restrict the laws for tax-exempt organizations. There are many organizations that are working around the tax law in order to be considered tax-exempt. Senators have expressed concern that such organizations are being set up to give donors large tax breaks without serving a substantial charitable purpose. The focus on any such examination should be on whether existing rules are maximizing the public benefits at the lowest cost to taxpayers. Third, we think that there should be a floor percentage of income that one must donate to charities in order to receive a tax deduction. This policy would be favored by the government because this would help to reduce the budget deficit. People who donate below the floor percentage of their income would not receive a tax deduction. Therefore, the government would receive the taxes that would have been previously deducted. This policy would also be favored by citizens because this would give them an incentive to donate more funds. The more one donates, the more tax deductions one would receive. In principle, the policy case for scaling back versus retaining the current deductions depends on the price elasticity of giving and on the nature of goods and activities that are subsidized by the charitable deduction.